Check, check, check. All right. I think we are live. Awesome. All right. Good evening, everyone. I hope you had a phenomenal weekend this weekend, and I pray that you are ready to roll for this week. If you are one of the few lucky ones that get Martin Luther King Day off tomorrow, then hopefully you get some time off to really rest and take a look at your charts and study. Otherwise, for those of you that have to work like myself, we will be working. So sadly, we won't be able to trade with you all day, but we will do the same and trade in the morning to see if there's anything on a low probability, low volume type of morning. Not sure if anything's going to come, but we'll still nevertheless prepare for the week and see what is going on. Expansion, thanks. Good. All right, so let's take a look over at the charts and see what we can find out for tomorrow and for the next week. So first thing first, what we look at is, well, we always look at the economic calendar, what happens this week, what happens next week, what happens the following week, right? So this week, we can kind of tell how there's pretty much a few red folders here. Retail sales on Wednesday at 8:30, unemployment claims on Thursday, 8:30 a.m., and then preliminary U of M consumer sentiment at 10 o'clock on Friday. So pretty standard week with unemployment claims being the key item there. Jay Whitway, what's up, bro? Good to see you, man. Kirk, hello. Expansion, can trades be taken 2 months tomorrow? Is that what you mean, tomorrow? Yeah, absolutely. You can, stuff's trading right now. I just can't trade because Rhythmic is broken, apparently. So those of you who trade my prop firm, Apex Trader Funding, as you all know, that is currently down. I can't get into Rhythmic right now. It's they have a data center error, and they're currently working to try to fix it, but anybody who uses Rhythmic to trade, you and I are in the same boat where we can't trade. So, but price is moving. It is a shorter day tomorrow, so all trades should be closed by 1 o'clock p.m. So just keep that in mind. If you are trading tomorrow, I would recommend you still look at price. Look at how price trades very icky on these half days, and then be careful trading the morning session after holidays. Those are typically low probability. They will typically be a lot more jagged. So just be careful with that. Watch it. If you've never traded it or observed it, just watch it and be careful when trying to trade. Don't trade it if you've never traded it before. Just watch the price. So tomorrow, again, like Monday, there's nothing that you can really do. It's a bank holiday, but we're going to take a look at the week either way. So let's go ahead and take a look at the week and see what we can find out, right? Okay, so a couple of things we're going to take a look at, and let me do this as well. So we're going to use TradingView today because, so the numbers aren't going to match up entirely, but enough to get a sense of what is going on still, right? So let me do one thing as well. Let me make sure that we are all good to go here. I think so. All right. All right, I think we're good to go. So hello, Phoenix. Good to see you. So what are we going to look at first? We're going to look at the dollar index. What has been happening on the dollar index? What is it doing? Where is it going? So as you all know, on the dollar, we hit a monthly premium a long while back at the October of last year. Ever since then, we rejected from there. We took out we took out this short-term low here, created a fair value gap, headed lower, and have started to reach back up into that fair value gap, traded lower, and are now back inside of this consolidation range. So we're still in this consolidation area. I think that there is probably going to be movement to the downside is what I'm anticipating, even though we traded to, if I can put a fib from the swing, say this swing low to this swing high up here, even though we traded to the 50% mark up here, we hit a pretty big key PD array up here and we rejected from there quite quickly. So from this price action on the monthly chart, it leads me to believe that we still have some ways to go to aim for, at the very least, to aim for some of this liquidity resting below here on the dollar, as well as some of like maybe this fair value gap here potentially. That's where I would consider maybe the rest of this fair value gap. I mean, there's definitely room for this to act like a mitigation block up here, but for the time being, since we rejected off of a key level here, I'm looking to see if dollar will continue lower, at least for this month. January is typically a bearish month, with February being bullish, but if we see January, as you can see, the month of itself on dollar index has been rising for the most part, which is weird because indices has also been rising. But that means there's quite an indifferent, type of movement here. So you need to pay close attention to where dollar is going. And the monthly, it's difficult to tell, but we think it's going to probably stay around here and head higher, as you might expect in January, just a little bit, and then head lower, potentially, depending on how markets hold. Now, I will be bringing up something really important that would lead me to consider the dollar index to continue higher, at least up into this inversion fair value gap. I think that, and we'll touch upon that in a few minutes, but for the time being, just keep in mind that I think, yes, because January tendency seasonally is to be bearish, we would expect dollar index to be bullish as an inversion there, at least up to this inversion fair value gap up here on the monthly. So let's take a look at the lower time frame charts here, or I guess lower than monthly. So we took out sell side here, right? We came up, take out buy side, took out buy side, relatively equal highs, traded back down to a weekly PD array here, and then starting to trade back up, but we traded up to this bearish order block and have started to kind of like meander around here. So it's really difficult to figure out where dollar index is going because look at how last week's price ended. It's one big doji candle, right? So it's really difficult to tell what direction is dollar going to go to. Is it going to run for these lows here, these relative equal lows, and will the market then proceed to head higher? Or will it consider heading back up, displacing above these relative equal highs, and market goes lower because there is some area of liquidity down here and an inversion fair value gap on the monthly, right? So the thing is we can make a case for both. So because we can make a case for both, it becomes very difficult to read where price is right this moment. This is the kind of setup that you look at and you're like, hey, this is not high probability. And we'll go into the indices too, and I'll show you why it's getting more so lower probability to figure out what's going on. There are some clues that lead me to believe that we will head to a particular reversal if certain things occur, but we'll get to those in a moment, okay? So let me check one thing as well. I need to make sure that we are actually here. Okay, cool. So on the dollar weekly chart, it's very difficult. We're right in the middle of this. We just rejected off of this bearish order block here, but we didn't go any lower yet. So rejection block down here is what we could aim for, or we could continue higher, maybe continue up into this daily volume imbalance that we see here, this daily sell side imbalance as well. It's only been traded and wicked through, so we could certainly head up into this imbalance here, and then head towards these relative equal highs, or head to the sell side. So again, on the weekly, nothing fairly conclusive. On the daily, equally as inconclusive. We traded up to this volume imbalance and we immediately rebalanced out of it. So we traded up to it with a wick and then came back down. We traded up to the low of that volume imbalance and traded down. So, but it's been holding in this kind of pattern here. What this leads me to believe, though, is that we have dollar index forming what's considered a lower time frame bull flag. Whenever I see this, I'm thinking, okay, do I see signatures of dollar bursting lower here and filling the rest of this particular buy side imbalance here and heading potentially even lower than that? So that's what I see. I see people thinking this is a bull flag, and I have a feeling that it's going to drop down first. Now, what does that mean for indices? That means for indices, we're typically thinking that with the inversion factor there, dollar down, typically risk on, indices up. I'll tell you why that in the short term that can still happen. Yes, it could skyrocket up here. Absolutely, it could. But given where the weekly's headed to, given where we're looking like on the daily, there's still some relative equal lows that form down here, followed by the rest of this this fair value gap here on the daily. In fact, they traded through most of it, but yeah, that's what I could potentially see, as well as these relative equal lows down here. I think it's going to head back down in that direction. So that's enough on the dollar index. So I am looking for evidence that it will expand to the downside. I haven't seen it yet, but maybe unemployment claims will give us an idea of how that works. If unemployment claims are very hot, meaning there's very less unemployment, people are having jobs, people are fine, that puts the government in a really weird situation, because if jobs are running really well, lots of people needing jobs, lots of companies needing jobs, then there's definitely something there. There's going to be a difficult time with the government trying to solve inflation. As inflation is rising, if there's lots of jobs, then, what can they do? They can either cut, or they can not cut and let inflation keep on rising. So let's head over to the charts, though. We're going to take a look at NASDAQ here. And we're going to take a look. So on the higher time frame, as you know, we've traded up into this weekly imbalance, and we traded lower from there. So let's look on the daily chart here. Last week, we traded up into this sell side imbalance, buy side inefficiency, right? And we traded to the midpoint of it more so. This is a 4-hour one. I'm going to delete that for now, just so that's easier to see. But we traded up into this and have started to accumulate, right? So right now, right this very moment, we are still in this area where we traded south to roughly if we take this swing low and this swing high, you can see that we traded to below the 50% mark, roughly the 62, the optimal trade entry mark. And then we've traded immediately back up almost to this high. I have a feeling that that's not the last of the highs that you've seen there. You can see that there's this buy side liquidity waiting here, up at the top here on Thursday, December 28th. And then you have this sell side liquidity on Friday, January 5th that's formed now. We are in the premium side of this range. We traded up through this SIBI, rebalanced it completely, pretty much, with the bodies of these candles. So now we need to look to see, does this turn into a inversion fair value gap? And we head up to take out not only that local short-term high, but also if we end up heading higher, to take out some of the all-time highs here, right? So that's something to keep in mind here for the time being. Yes, it does look like we've bounced off of this monthly intermediate term high as a mitigation block, basically. It does look like we bounced off of that for the time being. So depending on how the week goes, if we see us continue to push higher and squeeze, then that would be very interesting, because we have these relative equal highs up here and the ultimate 17,700 level to potentially breach as well. So that I think is very interesting on the higher time frame level. That leads me to believe that, hey, we could still go higher. If you can see here, At least let me go to the weekly. It'll be easier to tell. So typically when I'm looking at higher time frames, I look for market structure shifts, right? Do we see displacement below a short-term low? Yes. Okay. On the weekly chart, we traded back up to a bearish order block, traded further down, displacement again, trade up to that this fair value gap, wick above it, traded lower, and headed to none other than a, oops, let me do that again, none other than an optimal trade entry, right? You can see that there, traded into my optimal trade entry within this entire market maker buy model and headed upwards, right? So I don't think we're done with this yet because this short-term low on the weekly hasn't been violated. So what we want to see typically is, yes, when we have a quarterly shift, every 3 or 4 months, we generally see a quarterly shift, right? In this case, the quarterly shift could be continuation higher. It can be one of 3 things. It can be 1, continuation higher. 2, it can be consolidation. Or 3, it can be a reversal. So what we're looking for in the upcoming weeks is we're looking to see, does the weekly chart give us a huge displacement below this newly formed short-term low? So we see we had a short-term low here. We created a higher low here. So trend is still continuing to the upside because we have not violated any short-term lows like we did here on the way down on this retracement. So on the way up, we are still assuming that our movement to the upside is still on par. It's still what people are doing. Yes, commercials might be hedging, and we'll talk about that in a moment. But for the time being, we have not seen a true displacement lower. In fact, we saw this rebalance, this buy side, we had sell side, and now we're heading all the way back up past this area here. So on the weekly chart, I would look at this area. I would look at that area as a potential area for us to see an inversion if we are able to see us continue higher from here. I would not want us to see this broken, because if so, it could head lower and displace down if we are a bull or bullish on the bullish side. Now I know what some of you are thinking. I think some of you are thinking, hey, we are so far in premium, I'm gonna start to short now, and that's totally fine. You can certainly find places to short, and I think that that's very viable of a theory. You can be a bull and you can make money still, and you can be a bear and make money still. But be careful shorting before there's evidence that it will head lower, that institutions are indeed taking this lower. I think that typically when we see something like this, we start to see, everyone, if you're on Twitter, you start to see people putting millions of dollars into VIX calls. So a lot of people are starting to see that and prepare for shorts, but typically there's one big giant short squeeze to knock things out. And what could that be? That would finish off this market maker buy model, right? So we're at original consolidation. Typically we would take this out, form some consolidation, and then start to head lower for the next quarterly shift. I do believe in January we will see a quarterly shift at the end of January. I just don't know what direction it's going to be just yet. So we will talk about that a little bit further. So on NASDAQ, you can kind of see here, we started the week. Let me go down to a 1-minute chart so you can see this a little clearer. So where is it here? So right here, you can see how we closed the week right here, and then we open the week right here. So there's your new week opening gap here. You have this open, which should be a black line, and then you have this close. So that's your new week opening gap, and we see we traded down first and are now trading above that new week opening gap, right? Let's go back to the daily chart for the time being. That right there is your new week opening gap right there. So you can see that there's one a little bit later over here. It's pretty close by. We're not going to pay attention to that just yet, but we will note that we've had a couple of days of just really up and down doji type action here. on the daily chart, we have this high and this low that are within the current range, dealing range. So if you start to see PD arrays, like there's this daily PD array here as well. So this, from this low, see if I can move some of this stuff over. Let's make that purple as well. So this is a daily buy side imbalance in a discount of this dealing range. I would love for us to trade back down into this buy side imbalance and then head higher to tackle these short-term highs out and continue this trend to the upside during a typically bearish month. But there's a couple things that I've noticed that are really starting to tell that, hey, people are getting closer and closer to looking at things in a bearish tone. And let me show you why. So a couple of you may have looked through ICT's charter content, right? I'm going to show you something here that you don't typically see. Let me see if I can zoom out on this or not. This is too big. Okay, there we go. So this is what's called a commitment of traders chart. You'll learn about this in your studies on ICT 2016 model and 2017 model. So something that we plot and look at is net short and net long position. You can see typically all the green sections mean that the commercials, the really, really big players in this area, are net long. And you can see all throughout this time here in February, March, April, May, June, even. Mostly at May, they were net long, and you can see price continued higher, even though they started to leg into some of their shorts, right? Here. Now, you start to see a little movement and indecision between them roughly around June, July, August, right? So while we had that retracement here, they started to continue to sell into this during that retracement a little bit, very much less on the buy side, right? And then as you see it reaching up into these recent highs, commercials are really starting to load in and gain further and further short interest there. So it doesn't mean that they will go south just yet, but it is at 3-year lows. If you look at the commitment of traders data, it's at 3-year lows. So that's something that I'm really paying attention closely to, and you should too. Go through those lessons and really look at those a little bit further, because that is like kind of like the big players tipping their hands off to what they're thinking is going to happen. So that's a little gem that I hope you take from this and you go study that. K91X, how do I get this chart type? So you can go up to candles here, and you can use candles. That's all I'm using is candles here. And that's about it. I use horizontal and vertical lines. That's about it. Yeah. Hopefully that is, I hope that's what you're asking, K91X. I'm not entirely sure, but hopefully that's what you were asking. So anyways, so that leads me to really start to think, hey, commercials are starting to get net, like very, very, very deep levels of net short. So I'm watching closely to see if this goes back to our bias, right? I want to see us see a huge displacement below this weekly short-term low. I want to see that at the end of January, either this week or next. I would love to see that, because that would preferably at the end of January, because then that would lend me to the idea that potentially we could see a reversal, or we could see further consolidation before the next move. On the daily chart of NASDAQ, we'll get into ES as well, because there's a really key point I'm going to bring up in ES in a few more minutes. So stay on for that. Sorry, let me see this. Sorry, my bad. It was the commitment of traders, but you repeated it. Looks like I came in for a gem at the right time. Yeah. So yeah, so what you can do, first and foremost, you need to go study the commitment of traders lessons. If you haven't made it that far, don't worry about it. It's not like an absolute must-have for you to trade intraday, but you can go to barchart.com and then open up futures, and then you can look up your whatever you're trading, be it E-mini, gold, we can look up whatever you're trading here, and you can go to study. You can add commitment of traders, right? And it's this one right there. So that's your commitment of trader chart. I don't have time to go into that the whole way, but go study that lesson and you'll understand what I showed up right there. So that being said, the going back to the daily chart here, notice how during the daily chart we traded up to a daily sell side imbalance and we only traded up to the midway point of it and rejected. So this week and next week, I think we're going to see a little bit more uneasiness, a little bit more an indecision, I guess, per se, as you're starting to see here. I believe we're going to see a little bit more of that in the next week and two. Why do I say that? So I'm expecting a quarterly shift at the end of January. What do we see this week? We see that we have unemployment claims Thursday, right? What about next week? Unemployment claims on Thursday. What about the last week of January? So the last week of January, oops, let me move over here. We have FOMC right on January 31st. So that FOMC is going to tell us what direction are we headed in next. Okay, it's going to be really important. They're going to talk about rates and interest rate movement or lack thereof, and whether or not they're going to raise rates or they're going to maintain rates or cut rates. That's going to be really important for us moving forward. So be careful trading these next couple of weeks. It's going to be a little bit more dodgy. But for this upcoming week, right, where do we anticipate this weekly expansion moving? Well, we see that there's this remaining portion. If you can see these orange lines, this is a weekly sell side imbalance here. So I would expect, if I had a gun to my head, oops. I'm going to see if I can like smush these a little bit. But this is the weekly chart, right? So I would expect to see if we can squeeze above this short-term high, since there's a lot of people who went short. They all got squeezed to hell last week. And I think that there could be some more squeezing to be done above this short-term high into that daily SIBI, and then above this weekly short-term high up into the remainder of that weekly SIBI. Now, what's even more interesting is that they have all-time highs on NASDAQ resting, relative equal highs resting above there. So I am looking for evidence that we aim for something in that direction first, before we then see this short-term low violated at the end of January. I want to see that play out, because we can certainly stay in this range until the end of January, and we'll see if that works. Specifically, we're still in this weird little range here, and it could go up, it could drop down towards this. So when we're in this range, we don't have a high probability bias right this moment. We think it's going to head higher. We're looking for evidence that it heads higher, but it doesn't have to head higher, right? So on the daily chart, there's a short-term high here. We've created higher lows, higher lows, higher lows, higher lows, and we've taken out buy stops almost every single step of the way. So I think that these shorts probably aren't going to be safe, even though we did see displacement on the daily chart. I think that there's probably a little bit more to go, unless this proves me otherwise and we take out that weekly short-term low that is here. If we take out this level of the low, what does it say? 16,334.25. I think that we're going to head lower if we see displacement lower, right? some questions. Roxy, interesting. My chart already cleared that gap looking at the same NASDAQ. Yeah, this is actually a really important note for everyone that's using TradingView, okay? So if you're using TradingView, it's going to be very, very important for you. Hey, Anatoly, good night. Rhythmic lost who knows where. Yeah, Rhythmic is... It was their data center went boom. So they're trying to figure that out. We'll see if they figure it out by tomorrow morning. But it's okay. I mean, tomorrow is a half day of trading anyways, and the following Tuesday's morning is going to be bad trading conditions as well. Usually after a holiday, it's going to be bad trading conditions, okay? So so back to Roxy. This is so important. So listen up here. When you are trading and looking at the NQ1 continuous contract, you need to go down into this corner here and you need to adjust for contract changes. Make sure this is set to yes, because if you don't, it's going to look like they're relative equal highs, that you've already taken out that high on NASDAQ, and you're not going to have accurate charts. So Roxy, that will help you a lot there, okay? So just try to keep that in mind there, okay? So so this is where we're at on NASDAQ. I want you to keep this in mind, that we have these relative equal highs and all-time highs ready to go on NASDAQ, okay? Let's take a look at the Dow. So this is a monthly chart on the Dow, which is the ticker YM. And stay here, stay here. I'm going to lead you through this. We're doing multi-chart analysis, multi-indice analysis, because these are all related. And it's really important to do this, right? So on the Dow, we see that it's reached above into this rejection block, and it's actually almost at the high of 38263. It's right now, it's at it reached close to there. It reached to a high of 38089, right? 38263 was the high on Dow. So that means it's really close to this buy-side liquidity here. Could it break through there? Absolutely. Could that would be all-time highs on the Dow Jones. So we see that NASDAQ, let's go back to the NASDAQ chart on the monthly. So NASDAQ, close to breaking out on all-time highs. The Dow, also close to breaking out on all-time highs. Let's look at E-mini next, right? So E-mini, here's S&P E-mini. So look at how this is so different, right? So you have the monthly high on ES being 5,028 adjusted. We are only near the March 2022 high. We haven't even broken that yet. So if you're going to trade higher, yeah, absolutely, expansion. If you're going to trade higher, E-mini is going to be the one that you want to trade this week. If you are bullish, you want to see E-mini reach at least to above this high of 4860.25. Can it do so? Yes, absolutely. I mean, how many numbers is it just to take this and head higher? Well, that's where it's at right now, 4815. That's a solid that's a solid 45 points on E-mini just to get up to take this buy-side liquidity. Now, NASDAQ and E-mini, and Dow, they've already taken out this March high a long time ago here. You can see it right here. So they are aiming for all-time highs. E-mini is playing catch-up. If E-mini and Dow aim for all-time highs, do you think that S&P won't also do the same? So this is the Six Sister concept that ICT runs through. And that's going to be something that we want to watch closely within this little window of January 14th to January, January 17th, really, till February. I think this next window is going to be really crucial to see what happens at January expiration. So keep in mind for that. If you're bullish, you want to see it take out this short-term high. Now, what happens too, one thing I'm looking for on the higher time frames is that NASDAQ and Dow. Let's say NASDAQ and Dow both take out this all-time high, but E-mini does not. It only reaches to here before it starts to sell off. That's going to be key for me to then look for E-mini on the weekly chart to see, hey, does E-mini sell off and break through this short-term low faster than the other two? If that's the case, I would start to look for E-mini to be the one that trades to the downside faster. And within the upcoming quarter, there's so much downside there that I can't help myself but be bearish soon. But the same could be said to finish off this buy model and see S&P rip and have a blow off top before we see where it goes next, right? So these are all intermarket analysis that you can learn, like go to ICT's channel, study that, right? But this is all intermarket analysis that you can definitely see as yourself too. We will still be likely trading NASDAQ until I see something otherwise. I'm still looking for this to head higher. I want to see on the daily chart, given that we've headed up into this previous new week opening gap. Actually, this is like old data. Let me see. Yeah, this is an old new week opening gap here. This is going to be an old one. This is the new one, right? So, I mean, I want us to trade higher. I really do. I want us to see if we can trade to the top of this daily sell side imbalance and then trade up and through this short-term high, up through the rest of that weekly SIBI. Otherwise, if I start to see evidence of us really displacing lower, like through this short-term low and then through this one down here as well, I would watch to see if it can retrace to optimal trade entry down here before heading higher. That's the trade this week that I'm going to be looking for. So why is that? Well, this is our dealing range, right? Our current one, at least. We're within this low to this high. Optimal trade entry. What else is here? Bullish order block, followed by sell side or buy side imbalance on the daily chart, right? Optimal trade entry right here. These are three confluences that I'm looking very much so to see if they respect this here. Trade down to here, and then maybe trade down to here for unemployment, or maybe unemployment takes this out and heads lower. Maybe it trades down to here and heads higher. I don't know. But I am looking for that trade that I'm looking for is for us to trade lower here to take out, like to keep these here, trade lower to this PD array, grab some more orders within this bullish order block, and head higher to take out both these new week opening gaps and then some. Maybe CPI or maybe unemployment will help us take this out. But that's the model that I'm looking for, at least until I see greater displacement below, right? On the weekly chart. The daily chart, there are a lot of people that thought, okay, well, this short-term low got violated with this movement lower, right? And then they completely got wiped out here after they tried to short around this area. They kept on getting wiped out and squeezed. So when we see that kind of interaction there, this is kind of something that I disregard, and I take these intermediate term lows instead, right? So this is an intermediate term low, has a higher short-term low, a higher short-term low, and a lower short-term low. And same with this one. There's a short-term low here, a higher short-term low to its left, and a higher short-term low to its right. So these are intermediate term lows. We pay more attention to those. Studying ICT concepts, we pay more attention to those than short-term lows. So until we see those intermediate term lows violated, displaced through, and you'll be able to see it easier on the weekly chart. But until we see that, we are assuming that it will continue. Now, so that being said, I know a lot of people are thinking about going short. There's probably going to be plenty of opportunities to go short soon. But for the time being, this specific week, at least until Wednesday, I'm looking for us to potentially head higher. So one other model that could happen is we could head higher first and take out some of these buy stops and then head lower into these PD arrays, and then maybe further down too. That is another thing that I did consider that could happen because of how close we are to those those short-term highs up there, right? But let's take a look at E-mini in contrast. So E-mini in contrast, we have, let me get rid of some of these boxes here. You do not need to know what these are just yet. That is for your, probably you to study a little bit. This one we can leave on, that's fine. So we kind of see how we traded down into that past discount and then headed back up. So this type of reaction here leads me to believe that we potentially are going to continue and head higher, just because of the nature of this type of movement here. We could consolidate a little bit and then at unemployment break up higher, maybe take out some PD arrays down here and head higher. But remember, over on S&P, we haven't even broken through March's short-term high here. So there's liquidity waiting above this. What else is up here? Yeah, well, right around the consequent encroachment between these two, there's a relative equal high up here, right? Oops. So there's a relative equal high waiting for us on S&P right here. And then there's a sell side imbalance on the daily waiting for us as well. So these are all potential six sister concepts where if it has to get up in a hurry, E-mini is going to be the one that aims for these types of things in a hurry. Okay. Does that make sense, everyone? How if you're bullish, you want to be trading E-mini S&P this week. And if you're bearish, let's see if E-mini S&P fails, right? Let's see if it fails and heads lower than this faster. That's going to be key. So, so lots of cross-market analysis today. We definitely are. We are seeing that as we enter Asia, we're starting to see that higher lows are being made. We're already seeing decent movement on NASDAQ from where we closed the week over here. We see we had a swing lower. We took out sell side here. We went to this rejection block, rejected up higher. Could not make a lower low here. Continued up to the new week opening gap high. Could not make a lower low here. Displacement up higher. So now, on a very short time frame here, we have a, let's make this golden. We have a bullish breaker here. You don't have to mind what's over here. Basically, there's a indicator that can show you on the same lower time frame charts what happened in the previous few days, hours, 4-hour chart and 1-day chart. So you can kind of see all those at once. But I don't really care for that. We just noticed that, I just really care that, that we can see us trading higher. There's displacement here on the 5-minute chart, right? So if you are trading London, I would expect to see it price trade down to this bullish breaker and respect that, respect the new week opening gap, trade down to at least maybe the 50%, maybe wick down here, and then continue higher to take out buy side liquidity here, and more importantly, relative equal highs from Friday. This is where I think price is going to head to at least. And then, obviously, as you see a little bit more here, let me maybe go to a hourly chart. Let's go to a 4-hour chart, actually. So as you continue higher, there's relative equal highs here, and that would take us above this sell side imbalance. If we head above there, there's buy side waiting up here, buy side waiting up here, and I think all of those are going to get hit at some point. So, yeah, let me pause there. Everyone in the audience, what are your thoughts? Where do you think the market's going? Do you have any questions? Let me know what you're thinking, okay? I want to make sure that this is making sense to people, that you're really comprehending this, understanding what I'm looking at, what I'm really bringing to your attention here. Okay? So that is really what I'm looking for to tomorrow and this week in general. We're looking to see if price will trade lower, maybe head to this daily imbalance and then head higher. Maybe like leave these relative equal highs, give us a nice Judas swing lower, and then take out sell side here, and then head back higher. That would be my ideal case, right? Yeah. Any questions? Anybody wondering about something? Anybody seen something in the news that they're afraid of or curious what could happen? Who, let me type in the chat. Let me know what you're trading. Let me know what you're, what kind of like, are you trading NASDAQ? Are you trading E-mini? Trading gold? What are you guys trading? Hopefully you guys are trading NASDAQ with me. Jay Whitway, looking for lower dollar and higher equities. Okay, cool. Yeah, I'm hoping for the same too. If we can break out of this consolidation area that you see kind of like here. Yeah, this whole area here. It's kind of like a consolidation zone right now. We have to break out of that area, candle close wise, on dollar. And whether or not we break up and validate this retail bull flag, or if we drop down first, that's what I'm curious what will happen. If we drop down first, then we'll have bullish equities. Yeah, I agree. So, can our plan change? Yeah, absolutely. All right. Phoenix traders trading NASDAQ as well. Okay. Gotcha. So, yeah, I think that if we are bullish, plenty of injection for the week. Yeah. ES second. Okay. Okay. Cool. Yeah, I mean, let's wait for Monday and Tuesday. I would say the higher probability directional movement is going to be Tuesday in the afternoon session is my guess. I'm expecting Monday and rather Tuesday morning to be quite choppy. So I don't know if there's going to be a trade at 6 a.m. to 8 a.m. like I want, but we'll look for that too. We'll see. Yeah. Cool, cool. So you know my bias for the week. You know what I'm looking for. You know what I'm looking at from a higher time frame perspective. You know that we're looking at the commitment of traders and really watching the commercials and seeing how they're slowly increasing their short hedge positions. NASDAQ, but I'm unsure of dollar, a bias due to dollar consolidation. Same. And that's okay. I mean, this is how you recognize what periods are low probability trading, right? What would be high probability trading? Well, you take a look at November, right? So you see on November, we traded up to I think it's a weekly level there. Yeah, so we traded up to this weekly imbalance here, this sell side imbalance, consolidated a bit. And then once we got to November 3rd specifically, we got displacement lower on dollar, knowing that there is liquidity waiting for us down below here, right? And here, and here, and here, and here. So this movement lower on dollar, we proceeded to see all of November, and all of November, we saw dollar go lower. All of December, we saw dollar go lower. And so that is why I believe we will likely see dollar head even lower, finish off this market maker sell model. That's what I would like to see. And continue to have indices blow off top. Now, what does that mean? If we can take out this area of liquidity there, that would be ideal, because then we can take that out and then potentially start to head higher as well. But let's see. So I'm very nimble. Expansion says I'm very nimble trading lower time frame liquidity pools, 1 minute or less. Okay, good. Good. Yeah, you saw me trade some of those 1 minute, 5 minute liquidity pools on Friday actually, and I think most of the trades I kept up. So you can see the entries, you can see the stop loss, you can see the take profits and stop loss movement and management there. So that was a really good one. If you missed Friday's live trading, then or live recording really, then definitely worthwhile watching that. So yeah, I think that obviously all November, December we saw dollar go down. What happened to NASDAQ in all of November right here, November 2nd and 3rd, we see it just ripperoni, right? Nothing but rip higher. So yeah, you can definitely use dollar index and help this on a higher time frame. You can see when we see displacement out of consolidation, right? So when you start to see displacement out of this consolidation, that's going to tip your hand as to what direction indices are going to go, right? Dollar is going south. Indices are more prone to heading to the upside. And what do we have here? Sell side liquidity. Do we have buy side liquidity being taken on the way down? No, not really. So what does that mean? Well, if sell side liquidity is being prone to be taken, what's down here? Relative equal lows on July. So I think dollar is still likely to head lower. It can jump up a little bit, but I think it's likely to head lower. So yeah, hopefully that's been helpful. I wish I had, I'm going to see if Rhythmic is, yeah, basically Rhythmic is still unable to connect, so we're not going to be trading. Sorry for those that are trading in London and Asia. You're not going to be able to trade on Rhythmic at least. So we, of course, aren't trading London, but we will look in the morning to see what happens. Key note, if Rhythmic doesn't fix their data center problem, then I cannot trade. So what I'll do is I'll likely have TradingView open. I'll probably live tape read during the morning. And keep in mind, Monday is a half day, so don't feel like you're obligated to trade that day. But I still will be price reading and kind of walking through what I see, right? So probably 6 a.m. to 8 a.m. is when I'm going to target to be online Eastern time because I have work. So I have to work as well. But I will leave the recording on probably, I don't know, maybe we'll do something like this. And then we can have 5 minute, 1 minute, and like an hourly chart over here or something like that, something similar to what we have on the other side. So yeah, I think that's it for tonight. I'm not seeing any other questions in the chat channel. So we can expect something like this tomorrow where we'll still be able to record this and have this available. So it's going to look similar, but I just won't be able to take any trades. I'll try to focus on mostly tape reading tomorrow morning. But yeah, I like this setup here. I like this moving up quite a bit, right? Let me see if I mark. Let's see. I thought I marked this here already, but I guess not. 1800. Oh, this is on YM. That's why. That should not be. This should be on NASDAQ. There we go. And this should also be on NASDAQ. There we go. Okay, cool. That's a little bit better. There we go. That's what I wanted. So remember, we are looking at this bullish order block here. And we're going to see if price comes back down to it during London or if it leaves this as a breakaway gap. And only comes down to this fair value gap here. And we'll mark that as blue. So we are curious if this remains as a, where's that thing? Lost my color tool. There it is. Want to see if this remains open. So from here to here, want to see if that remains open as a breakaway gap. Or if price heads down to it and trades down to this previous short-term high here as a mitigation block, or better yet, this breaker here, right? Some questions in the chat. K91X, is tomorrow a big holiday? Expecting low speed like usual holidays. Yeah, I mean, most holidays you see volume go lower, so you can expect lower volume, lower volatility. Typically, Phoenix, when you mention Rhythmic, that involves what trading platform? Rhythmic uses NinjaTrader, so the one that you typically see on my charts. That's the one that I use through Apex Trader Funding, and that's the one that if you go to my channel, this link here, if you click on my links, this link here will take you to the Apex Trader Funding, and this is the this Rhythmic and NinjaTrader plan. That's the one that I use. So yeah. And for those of you who have been asking, my trading computers here, I use Falcon trading computers, so you can always check that out for some of the, this team only builds laptops and desktops for trading, so it's really nice. So yep, that's what I am looking at there. But yeah, that's for those who are trading Apex Trader Funding with NinjaTrader as their brokerage. Okay. Any other question? Actually, no, it's 1 till 10 o'clock. So this went a little bit longer than I expected, but we also weren't expecting Rhythmic to be down, so none of my charts were properly charted. So I think we'll do something like this tomorrow if it doesn't like, you know, if we don't see it come back on Rhythmic. But yeah, I'll try to be on around sometime between 6 and 8, likely more close to 7 o'clock because of the fact that I need to make breakfast for my wife and folks. So you can already start to see how price left this gap open and traded down into this fair value gap and is heading higher. So this is leading us, and we do see we traded down a little bit first, right? We came down here, traded down, could not make lower lows, displacement higher, could not make lower lows here. I would look for a retracement in London maybe to around here and then head higher. But let's see, you know, I don't know what's going to happen in across the board over here through what, like 5 o'clock, let's say. We'll leave that there. We'll see if that gets left open. This for sure we would like to see left open as a breakaway gap. But if we take a look at maybe the 15-minute here, 15-minute has this gap here that could be left open as a breakaway gap, and it's forming a fair value gap on this upside here that is breaking up above this area of liquidity too. So lots of movement so far in Asia, surprisingly. So it's in a hurry to get somewhere. Where that might be, well, I guess you'll have to decide on yourself where that might end up being. So we'll see. Okay. I think that's about it for today. Look for this 1-day SIBI to be tested this week, as well as this relative equal high up here. So awesome. Okay, folks. Well, I think that is going to be it for me tonight. I need to go shower, get some sleep, and do a little bit more studying on. I was studying price action model 3 today, and it's phenomenal. Getting a chance to really learn deeper on that. So thank you very much, everybody. Phoenix, thank you very much. And Anatoly, NinjaTrader. I use NinjaTrader for sure. Yep. So thank you all for watching tonight, and hopefully this was helpful. I appreciate the likes on the stream, and appreciate the subscriptions, and thank you so much for watching today. We'll hope to see you bright and early tomorrow if you're trading. If you're not, enjoy your holiday off, and we will catch up on Tuesday if not. But if so, we will see you bright and early tomorrow morning. So take care, get some rest, stay hydrated, everybody, and thank you all. I guess I'm not on my screen. The subscriptions, and thank you all so much for coming today. And we'll hope to see you bright and early tomorrow if it was. If you're not, appreciate the likes. Enjoy your holiday off, and we will catch up on Tuesday. If not, Jay Whitway, thank you. Yeah, anytime. Glad to have you on here. So take care. Get some rest tonight. Hydrated, everybody. We'll talk soon. And take care, everybody. See you later. I'm not on my screen. The subscriptions, and thank you all.